If you are a trader, move your hands. If you are a trader, move your hands. If you are an investor, sell your calls. If you are an investor, sell your puts. If you are an investor, sell your spreads. If you are an investor, close your eyes. By the way, a quick disclaimer that all the calls and puts sold by the investor in my song are all either cash secured or secured by the securities. Actually, the investor holds all the securities and the cash for which he has sold either the calls or the puts. Now, in today's video, we are going to talk about what I exactly stole from Rachana Ranade. In order to know the real answer of this question, you will have to watch this video till the end. By the way, if you have not subscribed to my channel and if you have come to my channel for the first time, do subscribe it and don't forget to press the like button. Don't forget to press the like button over here. What are you looking for over here? Subscribe to my channel. Subscribe to my channel and press the like button and share the video with your friends. Don't look out for the links of the Grow app because this video is not sponsored by Grow. And now, in today's video, we are going to talk about what I actually stole from Rachana Ranade. In order to understand the answer of this question, you will have to first understand how a person usually behaves when he first enters a market. When he first enters a market, what happens is that the market is something which... Oh my god, it's 9:15. I must jump into my trade. Let me see what G business, what CNBC Awaz is predicting today. Oh my god, market is a huge bullish. I must go on to my Zerodha kite and buy something. What should I buy? What are the tips? Do I have any tips? Tips? Oh yes. Buy Reliance Industries. And let me buy 3,000 shares of Reliance Industries. Yes, let me buy Reliance Industries. Huh? Yes, I'm having a profit. I'm having a profit of 5,000. Yes, it's 4,500. Oh yes, 5,600. Oh, 7,000. Yes, 8,000. 8,000. 8,000. Oh my god, it's falling. It's 4,600. Oh my god, it's 3,000. What should I do? No, I will not sell. Just let the market settle down a bit. It's only 9:30. Let the market settle. 1,000. Oh my god, coming red. It's minus 1,500. Minus 1,500. Let me purchase a few more shares of Reliance. Exactly how a person who usually enters the market for the first time behaves. What are the symptomatic behavior that we have found out of this instance? Firstly, the person has jumped into the trade as soon as the market has opened. The market has opened at 9:15 and he has jumped into the trade. And then secondly, the most important thing is that the trades usually depend on statistical probabilities, right? So he doesn't seem to have any stop loss. His stop loss is probably in his mind. I don't know whether he has actually any stop loss or not, but somehow he has not acted on the basis of stop loss. So risk reward management is not done properly and judiciously. So this is how most of the individuals who entered the market for the first time behaves in this type of pattern, right? So what this person actually is he an investor? Is he a trader? Most often than not, what we will find out is that a trader should actually be very knowledgeable of the technical aspects of a particular chart. He should have a complete knowledge of all the technicalities, right? So if a trader knows the technicals, so he should necessarily be in profit. if he knows RSI, if he knows the Bollinger Bands, if he knows, how the stock, how the trend line works, if he knows how the horizontal line works, if he knows how the MACD performs, so he should be ideally in profit. But actually, most often than not, we will find out that in spite of knowing the technical details, he will not be in profit. Even if he puts a stop loss, the stop loss will be hit most of the occasions for the retailers than the take profit target, right? So what we will find out is that putting stop loss in the system will not ensure the profitability. Knowing the technicalities of the chart will not ensure the profitability. Knowing the fundamentals of a company is important, but that is not the single criteria which can earn you the profit. Knowing, having an access to the information through different media, TV channels, through different other sources is not the essential thing. Is not the sole essential thing. It's not an exclusive criteria for going into a profit. What importance for a profit, what becomes important for having a profit is the assessment of a statistical probability. If whether a trade is able to provide me an edge, a statistical edge, whether the chance of giving profit is higher than the chance of giving loss, that should be accessed properly. Otherwise, it is very, very difficult to make a profit in a trade. Right, and secondly, we will find out that when this trade goes against this man, when this trade goes against the wishes of the trader, most of the times it does, and this trader compulsively becomes an investor. He keeps on, he goes on to hold his position, which he actually should not, because investment is something which you should do very judiciously, thinking about the script, having a proper knowledge about the fundamentals of the company, right? So investment is something which you do for increasing the wealth, which you do for a long period of time, and over the years you expect that your invested amount would multiply and will provide you a substantial wealth. But is it the only thing that you should know about investment? Does it make you an investor, or does it make you a trader? What is very interesting to note is that at times we remain very, very happy and satisfied, thinking that if we invest through different platforms, like the apps that are prevailing in market, if we invest through those platforms along with thousands of other subscribers of different YouTube channels, we will become an investor and have a handsome amount of money. I will have a beautiful, splendid vacation at Mauritius with this invested amount, and as I will become rich, thousands of viewers of those subscribers, thousands of subscribers of those YouTube channels have also probably have invested in that in those companies, especially at a time when the market is not moving beyond 16,000 and is not even going down below 15,500. So our Indian market is standing at a very crucial point. It's whenever whenever the index moves up a bit higher towards 15,900, something pulls it down towards 15,500. So 15,500, if you purchase at 15,500, when the index is at 15,500, the stocks would be accordingly priced. And when the index moves up a bit at 15,000 towards 15,900, 15,850, 15,900, the stocks will accordingly move up. But that gain is neither a substantial gain for an investor, and let aside the questions of a trade, the probabilities of a trader, because the traders mostly lose their money in the process. What we will find out is that we will keep on investing. Over the years, we will keep on investing in a particular range when the market is actually trading and operating within a particular price band. Say, for example, it's trading from 14,800 to 15,900. In this 1,000 range, the market is probably operating within this 1,000 range, and we are putting in our money every month month after month, every month on those particular dates when these SIPs, systematic investment plans, are being deducted from our accounts, like on 5th of the month, on 10th of the month, on 25th of the month. So actually, what we do is that we are basically putting in our money at a price which is not at all conducive for investment. Investment opportunities do occur rarely. It probably comes thrice or 4 times in our entire lifespan. So it's not that investment in something which you can keep on doing time and again over the years, month after month, and after that you will become very extremely rich and you will have a splendid vacation at Mauritius. This is not how the system operates. System operates rather in an opposite manner. When you invest your money through those apps into those companies, either through mutual funds or through direct asset management companies, what you do is that you are basically entrusting your money to those companies, to those asset management companies, to those mutual funds, so that they can provide you the return. But what they do in turn is that they actually suck out a substantial portion of your original capital as their as their money management fees, right? So you are losing a substantial portion of your capital because the market is in a particular range, and they think for a hypothesis that now suddenly the market somehow, for any reason, market pulls down, market suddenly crashes down from 15,500 to 11,700. So it's a straightaway ready-made fall of 50%, 40 to 50%. And when the entire market pulls down 40 to 50%, you will find out that your stocks are probably trading at a 60 to 70% discount from the present rate. So this is the time when you should actually be investing, but you cannot invest at that time, because you have already invested throughout the last 1, 2, 3, 4 years. You have been investing from 2009. In 2009 probably you will not invest, because you have a memory of a sudden crash in 2008. So you will be probably investing from 2011, 12, 13, 14, 15, 16, 17, 18, 19, and suddenly in 2020 you will have a crash, you will have a sudden fall, and the price will go back to the range of 2012. So what have you got in the long term? You have virtually got a notional loss of 2%. A notional loss of 2%, and when you have enjoyed the profit, when you had those notional gains, you have not booked your profit, because investment, you have been told time and again, ये तो long term का matter है ना. So you are not supposed to book your profits when you are actually having those profits. But when you are having the loss, you cannot psychologically take those loss with you. So what we will do is that on those March 13 days, 13th March, on those days of 13 March, 14 March, you will probably, out of panic, you will sell out your positions which you have invested for the last 7-8 years, because you are virtually witnessing a price which you have not seen for the last 7 years or so. So this is the time when you should invest, but you don't have that much of purpose to invest in that market, because your money is already being invested in those in an uprising market. But many of the people will probably argue that it's not a judicious idea to time the market. But if you talk about the most important person, the most significant personality who has talked about this idea, he himself holds more than 120 billion US dollars in cash. So he has more than 120 billion US dollars in cash. So whenever market crashes down, he will be the first person to grab the opportunity, and it will happen. It's not that it will not happen. It will happen in some time. It's not that the market can go up and up and up and up and up. This is not how the things operate. Even if it goes up for 5 years, in just 1 month it can go down to a price which we have probably seen in the last 7 years back. This is how the market operates. So if you have been putting in your money for the last 6-7 years, you will find there will be a day when you will find that your entire investment is in some sort of notional loss. On those occasions, nobody will be there with you, standing with you and assuring you just go on with your investment. But you will be panic stricken, and at that point you will be probably selling at a lowest point of the market. This is how the market cycle operates. So what did I actually steal from Rachana Ranade? What I stole from her is the idea that investment should be done, but not in the manner which she prescribes. Not in the manner, every month I will put my money through the Grow app and it will go into my, Grow app account and, not in the manner of making an SIP. SIP is definitely a very good concept, but not in a market which is in a particular range. But in a falling market, it will be very, very, profitable idea. But it's a market which is probably, trading at a particular range. There is a probability, high probability that it may go up, but there is also a probability that it will go down as well. So even if it goes up, it will go down. There will be some occasions when the market will go down. You cannot deny these facts. There are occasions when the market has gone down. So what I have actually stole from her is the idea that one should invest in the market, but not in the manner probably which she advocates in her concept, right? So this is what I have stolen for her. And a quick disclaimer: this video has no personal, grudge against her. She is undoubtedly a very a prominent, chartered accountant of our country and a very prominent YouTuber. With all the due diligence and respect, this video is made only for the purpose of entertainment and education. It should not be seen as an educational. It should not be seen as an advice, as a financial advice. Do consult your financial advisor before making any decisions. Thank you.